like you said, if you marry your strategy to what their rules are, then it could work out really well.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, I thought we could talk about the evolution of prop firms over the years. I know you probably get pitched a lot. I've been pitched a lot on prop firms, but how have you seen them evolve, and do you think that they're more beneficial to traders nowadays?
Well, what I've noticed is a lot of my trading students, they're trying to qualify for them. So I had to pay attention, you know what I mean? Because because of my life experience, I probably put them in a negative, I had a negative light. I knew a trader who I was pretty good friends with who started one and was deceiving the people because he was reversing their trades,
Mm-hmm.
and I thought that was unethical. I don't associate with him anymore or anything like that. When I saw that, I was like, wow, like this is the Wild West, where he's like trying to get these guys to qualify for the fund, and they're actually trading for the fund and they don't know. It's just their trades are flipped. He had to have the system designed. He had to actually have the platform custom built for that.
Mm-hmm.
Anyway, so and I knew that there were a lot of them where they force you to pay a certain amount, and basically for education or something like that, and basically that money was to cover your losses in case you couldn't cut it, which most traders couldn't cut it. So you know what I mean. And there was a lot of this stuff going on, and they still do that. And I understand, if I ran a prop firm, I would probably make sure that they had to pay. I've only seen one where it says you don't have to pay, but they don't give you much of the cut. Okay, so this is what I think is going on. I think with the prop firms, you notice how they all cap it at a certain amount. They go, you can only make 500, you can only trade 500,000 or a million or 2 million or whatever the number is. I can guarantee you that what they do is they allocate larger accounts to the best traders. Okay, so they say you're getting 90% of the profits. That's 90% of the $1 million account that you think you're trading. The other 7 million that you're trading, you have no, you know what I mean? You don't see that, right?
Yeah.
Do you know what I mean? Like I guarantee you that's what they're doing. So, but having said that, I understand the model, and it makes a lot of sense. If you look at all the rules, they're completely concerned with managing risk. And what does that tell you, right? As a trader, if you work for a bank or a fund or a prop firm, right? Same thing. It's basically a fund. What you have to do, what you have to understand is risk. That's the number one thing. Getting a profitable system is not that important. That's the easy part. Trading it may be a little bit more difficult, executing the system, but locking in your risk so that you don't hit their drawdown rules of 5% or 10% or whatever it is, that's the tricky part. And that's really what, you get paid to do as a prop traders. I think they're better, and the choices are more, there's more out there than there was like in 2006 or whatever. Actually, one of my first jobs I got as a trader was as a prop trader. I think I probably told this story. He was in New York, I was in Sydney, and I was trading money for him. And he was getting really upset with me because it was about the time that I started figuring out if I traded the higher time frames, I did much better. And what I didn't realize, and he made this very clear, the prop firm, they wanted me to churn the accounts. In other words, take a lot of trades, because they widen the spread and they made money on each trade. So the prop firm didn't really care about how much money they made on the profits of the account, because their cut was very small, like 20% or something like that. And my cut was like 8 or 9%, something like that. And so, but what they did is they liked these fat spreads, the deal that they had with the broker. So that meant, keep trading, man. Keep going. Who cares? If it's break even, that's okay. Just keep trading. And so I was like, I see what this game is, that sort of thing. So it was kind of funny. It's kind of funny seeing that up close, I guess. But that was a long time ago. So things have changed. There are some good ones out there. I would definitely the thing is, you got to marry your trading style to their qualification rules. Like some of them, they say you have to qualify in 30 days. So you got to work out how many trades have you got to take to do that. Some of them, they don't have a qualification time. It just can be whenever. Some of them have the 5% rule where you hit 5%, you're out. Some is 10%. There's all different kinds of rules here. Some of them have more aggressive rules for traders who want to, be a little bit more aggressive with the risk. So it really comes down to a game of risk and matching up your trading style. Are you going to have enough trades to reach the goal, by the end of the month or the end of the 60 days or whatever it is.
Mhm.
So yeah, and most of them have like 2 qualification phases. So yeah, so it's definitely doable. I know traders who've done it. I've helped traders who've done it, but it's really about a marriage of what you want. Like for example, so I'm trading Litecoin and Bitcoin, and I don't really like brokers where they have a wide spread on those pairs.
Mhm.
So like if I was going to go to a prop firm and trade Bitcoin or Litecoin and the spread was really wide, I couldn't do that system, right? And I like
Mhm.
that system right now. Like I'm trading it a lot. So I kind of have to go with my own money to a crypto broker, right? So it's not like MetaTrader or anything like that. So yeah, what have you seen?
Yeah, I mean, I agree with you. Back in the day, they were like super dodgy, and they were all about day trading, right? You have to close your account at the end of, close your trades at the end of the day. And I get it, like you said, that's like the risk management piece, but that excluded like a majority of the traders out there. And I only started looking into this in the past couple months, or reassessing it. And yeah, there's a lot more options nowadays. It's actually pretty cool. And the biggest issue that I used to have was like I said, the day trading thing. But now there are firms coming up that allow swing trading. They don't have like a 30-day qualification thing. They can just, like you said, take as long as you want, as long as you don't hit your drawdown and you hit your target, it's all good. So I think that's huge. I think that's a tremendous opportunity for the average independent trader. And like you said, if you marry your strategy to what their rules are, then it could work out really well.
Yeah, it's cool stuff, man. It's definitely worth checking out. You really have to understand the math side of trading, the risk side to
Mhm.
get it right. How many trades am I going to have over 30 days? What's my risk got to be so I don't have my drawdown, that they'll kick me out or make me set, they have the reset fee.
Yeah,
It's like
yeah,
it's
yeah.
like it's $2,500 to join, but if you blow up, you can only just pay another $9.99, and then you can have another 30 days. It's like these guys are making money on the on the all the guys trying to qualify. You know what I
Oh
mean?
yeah, yeah, yeah.
It's so funny. It's like one of the Market Wizards in one of the Market Wizards book. I don't know if it was Market Wizards or New Market Wizards. One of the guys, he had a script, and he said, "I view the script as a source of income because he could sell the option to the script to make a movie, right?" And so
Mhm.
the way it works, for people who don't know, you buy the script and you have options to make a movie over a year or 2 years or 3 years or whatever it is. So he said he had this really good script that he wrote, and he saw it as a source of income because he would option it, he'd get paid. They wouldn't be able to put the movie together, right? Because most movies don't get made, right? They fall apart at funding or getting the talent or whatever. And so then he would option it again and make money. And this is what these firms are doing, right? The prop
Mhm.
firms, they're viewing potential traders as a source of income. You know what I mean? It's like
Oh yeah.
keep trying, keep trying. You know what I mean? That sort of thing. So it's awesome. Yeah, it's great for them. So yeah,
Yeah.
but yeah, so just get the marriage right between what you do well versus what they're looking for. Like you say, like a lot of them, they don't. You can hold your trades over the weekend now, and that, like you say, that wasn't the case. It was all about getting out before the weekend. They couldn't have the gaps destroy their positions and that sort of thing. But nowadays, it's totally different. Yeah.
Mhm. Yeah. And I think competition is gonna, bring things down, bring those fees down, make it more advantageous. So it's a good thing. All right. Thanks, Walter.
Definitely. Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.